The year 2025 will go down in history as the turning point for global currency watchers, particularly those who have long believed in the revaluation RV potential of the Iraqi Dinar IQD and the Vietnamese Dong VND. For more than a decade, the conversation surrounding these currencies had been relegated to speculation, late-night debates in investor circles, and occasional updates from analysts tracking Middle Eastern and Southeast Asian markets. But this year, something extraordinary happened. The stars aligned economically, politically, and financially in ways few could have imagined. Iraq, after years of rebuilding its oil-dependent economy, finally unveiled reforms that positioned the dinar as a serious contender in global trade. Vietnam, with its booming manufacturing sector and rising foreign investments, pushed the dong into the spotlight as one of Asia's most undervalued currencies ready for correction. The overnight surge in these currencies was not an accident. It was the culmination of years of policy groundwork, reforms, and international negotiations. The significance of this cannot be overstated. For IQD and VND holders, what was once a dream turned into reality, almost literally overnight. Why now? The timing reflects a combination of global shifts. Oil markets have stabilized with Iraq regaining export dominance, while Vietnam has become one of the top global manufacturing hubs, rivaling China. Both nations needed stronger currencies to reflect their new roles in the world economy. International lenders, central banks, and foreign investors all played a part in pressuring for change. For ordinary investors, this was the shock of a lifetime. Those who held on to their dinar and dong through years of skepticism suddenly woke up to life-changing gains. Social media platforms flooded with celebratory posts. Investor groups buzzed with excitement. And financial news outlets rushed to cover what many are calling the biggest overnight wealth shift of the decade. In short, 2025 is no longer just another year. In the long revaluation, Sagat is the historic year when belief met reality. The shockwave began with whispers late one evening as reports surfaced from international banking channels. Within hours, it was confirmed. Both the Iraqi dinar and Vietnamese dong had surged against the US dollar in ways never seen before. The Iraqi dinar IQD, long pegged at suppressed rates, suddenly leapt 2 levels analysts had been predicting for years. Early reports placed a new trading value at 750 dinars per US, down from the thousands where it had hovered. For dinar holders, this meant an instant multiplication of wealth. Those who had stocked up on bundles of dinars suddenly saw the equivalent of tens of thousands of dollars in added value appear in their accounts. Meanwhile, the Vietnamese Dong, often compared to the dinar in investor circles, experienced its own remarkable shift, although not as dramatic in absolute numbers. The dong's value correction represented a massive percentage gain, making it a global headline alongside Iraq's big move. For Vietnam, the dong's appreciation marked validation of years of steady growth, international trade expansion, and foreign direct investment inflows. Banks across the world scrambled to update exchange rate boards, Forex platforms lit up with spikes in trading volume, and overnight, millionaires began to emerge. Currency traders describe the event as a perfect storm of fundamentals aligning with investor patience. The sudden surge wasn't just about financial gain, it was also about credibility. For years, skeptics dismissed the possibility of an IQD or VND revaluation as wishful thinking. Now, with rates adjusted and officially recognized across global banking networks, the conversation has shifted. The question is no longer if but how far these currencies could go in the months and years ahead in the span of a single night. The Iraqi Dinar and Vietnamese Dong transformed from niche speculative assets into serious contenders in the global currency market. The journey of the Iraqi Dinar IQD and Vietnamese Dong VND is nothing short of extraordinary. For decades, both currencies carried the weight of their nation's struggles, wars, sanctions, political turmoil, and economic rebuilding. Their suppressed exchange rates were not simply numbers on a Forex chart. They represented the hardships of entire populations. For Iraq, the dinar once carried immense prestige. In the 1970s, it traded higher than the US dollar, symbolizing Iraq's oil wealth and geopolitical influence. However, decades of war, sanctions, and economic instability devalued the dinar to a fraction of its former self. The 2003 Iraq War, corruption, and reliance on oil exports further eroded confidence. Investors speculated for years that once Iraq stabilized politically and economically, the dinar would return to its rightful strength. Vietnam's Dong has a parallel, though different, story. Emerging from decades of conflict and isolation, Vietnam's economy struggled under central planning. The Dong's value was kept artificially low, making it one of the weakest currencies in Asia. Yet, in the background, Vietnam quietly transformed into a manufacturing powerhouse. Multinational corporations from electronics giants to textile companies moved operations to Vietnam, fueling massive export growth. Despite these fundamentals, the Dong remained undervalued, sparking speculation that one day it would correct dramatically. For both currencies, this RV narrative became legendary in investor communities. Countless blogs, YouTube channels, and online forums were dedicated to discussing when, not if, these currencies would rise. Years of false starts and rumors tested the patience of holders. But 2025 finally turned speculation into fact. The history of IQD and VND shows us one powerful truth. Currencies reflect not just economics, but the resilience and rebirth of nations. The surge in 2025 was more than a financial story. It was a symbolic victory for Iraq and Vietnam on the global stage. The big question on every investor's mind was simple. Why now? Why did both the Iraqi Dinar and Vietnamese Dong skyrocket in 2025 after years of rumors, predictions, and disappointments? The answer lies in a combination of economic reforms, international pressure, and global market timing. Oil revenue stability. Iraq regained control of its oil exports, ensuring steady revenue debt restructuring. Agreements with international lenders reduced external pressure on the central bank. Currency reform laws. 4 months. Insiders reported Iraq's parliament passing measures to prepare for lower denominations and banking upgrades. The world in 2025 was ready for a currency reshuffle. Inflation in major economies, shifts in oil demand, and emerging market growth all created the conditions for undervalued currencies to finally be recognized. The dinar and dong were simply the right currencies at the right time. This perfect alignment explains why the surge felt so sudden yet inevitable. Years of preparation, whispers of reforms, and global anticipation culminated in a single night. When the financial system finally acknowledged the true strength of Iraq and Vietnam, for investors, this was the long-awaited moment of validation. For the nations themselves, it was a proud declaration that their currencies and their economies had arrived. The explosive rise of the Iraqi Dinar IQD and Vietnamese Dong VND in 2025 was not just a financial shockwave, it was a global event reshaping markets, investors' lives, and international banking systems. For investors, this was the breakthrough they had dreamed of for years. Many had held on to dinar and dong patiently through cycles of rumors and disappointments. The overnight surge instantly transformed small speculative holdings into life-changing wealth. Stories began flooding in of families paying off debts, funding college educations, buying homes, and securing retirements. The RV wasn't just numbers on a chart, it was hope fulfilled. The banking system was also caught in the storm. Major institutions like Chase, HSBC, and Citibank began updating their foreign currency desks to handle massive demand. Exchange counters that once dismissed IQD and VND as exotic suddenly became the busiest departments in global banks. The revaluation also boosted confidence in emerging markets, as financial institutions recognized the possibility of similar shifts elsewhere. On the Forex market, the revaluation shocked traders and algorithms alike. Overnight, the liquidity and volatility of IQD and VND soared. Analysts called it the most significant currency event since the euro's introduction. For hedge funds, day traders, and central banks, this was both a challenge and an opportunity. The sudden repricing forced global portfolios to rebalance, making the RV a catalyst for broader financial adjustments. For Iraq and Vietnam, the RV was more than economic, it was symbolic. Iraq demonstrated that it could rise from decades of conflict and chaos to reclaim financial strength. Vietnam showed that years of patient economic reforms and industrial growth were finally recognized. Both countries now stood with renewed pride on the global stage, no longer seen as undervalued underdogs, But as emerging financial powers, looking forward, the revaluation set the stage for new opportunities and new risks. Investors celebrated their gains, but governments emphasized stability, urging holders not to flood markets with sudden selling. Experts predicted continued adjustments as both currencies settled into new ranges. Yet, one message echoed across trading floors, news networks, and investor forums. The long wait was worth it. The 2025 RV of the dinar and dong wasn't just a market event, it was a historic turning point. It changed the lives of investors, altered the dynamics of global banks, and proved that currencies long overlooked could surge with explosive power. More than anything, it reminded the world that patience, resilience, and faith can finally pay off in spectacular ways.